And on that note, Dom, we're looking at what to do about all of this in Market Navigator.
So, I mean, specifically other parts of the market besides just the Mag 7 technology, the war on inflation, not necessarily over at this point. In fact, there's mounting evidence that the battle could continue well into next year. One of our bond experts, though, is fortifying his portfolio right now against any surprise inflation issues in 2025. Joining us now is Manju Boraiah. He's the head of Systematic Edge Fixed Income at AllSpring Global Investments. Manju, thanks for being with us this afternoon here on the Market Navigator. I wonder what's got you worried about the inflation story in 2025, and how exactly do bond and income investors have to prepare for it?
Hey, Dom, thanks for having me. It's great to be here. I think if you look at inflation, I think there was the upside surprise in inflation that we saw just a few days ago. The PCE number that came out was higher. But, if you look forward, right, from a policy standpoint, I kind of see risks from three perspectives, right? So the three categories of impending policies that we potentially see, one is around deregulation, tariffs, and tax cuts. All three are inflationary in nature, right? Given that, I do see that there's potential for the Fed to either pause their rate cut cycle or even change their stance and even hike their rates if there is upside surprise in inflation going forward. So I think from my perspective, I think the inflation persistence and policy uncertainties are going to play a huge role in the future.
Now, Manju, what exactly do you do about it? How exactly do you ensure that you can have a portfolio protected against those kinds of risks in 2025?
Yeah, so I would say three things, Tom. So one is just, it's better to go up in quality, right? To manage the credit risk, I would say it's better to, essentially avoid kind of some of the lower quality sectors and kind of go up in quality. The second is to diversify, right? So diversify across the duration in curve, sectors and geographies. And then the third thing is increase your allocation to tips. I think that's the best way to kind of hedge your exposure, if there are potential upside surprises in inflation moving forward.
All right, portfolio protection for 2025 and the possible looming inflationary threat still. Manju, thank you very much for joining us. Manju Boraiah at AllSpring Global Investments. We'll see you soon, sir.
All right, thanks for having me, Dom. Take care.
You know what that reminds me of?
What's that?
I-bonds.
I-bonds, yes.
We were talking to our financial advisor the other day who said a lot of his clients have been cashing theirs in and taking the 3-month penalty on interest just to get out of that product, which was supposed to be a big beneficiary of high CPI. Of course, CPI has come down. Now they're getting 3% maybe, and they're going into look at the rest of the market. They feel like they've been left on the sidelines.
They have been, because everybody who is pretty much allocated to anything besides Bitcoin and the S&P 500 or the NASDAQ Qs has been left behind.
And that's why I wonder if he's right, and if inflation is sticky into next year, will we finally see a turn of events where, maybe, okay, we don't really want to be in fixed income, but maybe it's more of a hurdle point for the market, for Bitcoin, and maybe not.
I just wonder if dividend investing becomes in vogue again.
Right, exactly. Get that hedge.